welcome back to Amicably Yours. I'm Jana and this is Zach. Zach is a mortgage broker here in Calgary, and Zach and I work really closely together on lots of the files that come through our office. Hi.
Hi, how
Thanks
are you?
for coming.
Happy to be here. Beautiful office, beautiful part of town. I'm excited to be here.
Thanks. So, tell me about your business.
So, I am originally from the banks. In the last 3 years, I've started out and started my own mortgage brokerage team. We're called the Three Peaks Mortgage Team, and that is because of my 3 daughters. So, just started
I love
out.
that.
Yeah, thank you.
That's a great.
Thank you. Yeah, it does work. It has some pull, that's for sure. Girl dads, we were united.
That's really sweet.
So started my own mortgage brokerage team and was working for you with you, forever. And now I just feel like I can help out our clients better as a broker.
I love that. Well, I do refer most of my clients to you, and there's a reason for that. I feel like you provide a really timely service where you work with us to help parties separate and refinance and move on with their lives as efficiently as possible. So, have you watched Mrs. Doubtfire?
Probably too many times, yeah.
Such a good
Once
movie.
again, having the 3 daughters and rolling through it again and watching all those old 90 movies again, so I'm remembering it. The jokes are landing differently as a late 30s-year-old as like a 90-year-old.
And as a dad, maybe too,
and
right?
as a dad came out, yeah.
Yeah. What's your favorite part?
The face in the pie. My
That's
daughters
what
seem
I
to love
said.
that, yeah.
That's
The
my
face in the
favorite
pie,
too.
yeah.
Okay, so imagine Miranda and Daniel, okay? They're living in this one house, they're both on title, okay? Now they're separating. Okay, so now let's say Daniel comes to you, or I send Daniel to you.
Okay.
Hey, all the equity's tied up in the family home, I'm on title, she, I guess, is keeping the house, we haven't really talked about it. What do? I need a place to live. Zach, help me.
So first steps I want to talk to Daniel about, and I do this with all my clients, but whenever we're looking to get him a new mortgage or get him a new property, I like to go over the acronym I use for his ICE. So I like to go over his ICE. So his income situation,
All right.
is he going to get any spousal, child support, where's going to be the matrimonial home, what's his income situation going to be? Not only to make it give the appetite for the bank, but also for the client. The last thing I want to do is put a client in a mortgage that's going to be a problem in 6 to 8 months, right? Like making sure it's within their budget. Then the next one would be the credit. So what is, unfortunately, I don't know too many people who are going through a divorce or separation where their credit is going up, right? It would be a one of one if I've seen that. So see where their credit situation is currently, and also after the breakup of the marriage, what sort of debts are going to be paid out? Like what's it going to look like at the end? Right?
Okay. Well, in the movie, I think that Daniel loses his job.
Yep.
Right?
That's a tough one.
That's a tough one.
Things weren't going great for Daniel.
They really weren't.
No.
It was so bad for him. So now he doesn't have a job. I guess we have to figure out the equity, what he's going to get out of the house, and then is she paying him support? Because it seems like she has a really good job.
Yep.
Right, interior designer or something.
Mm-hmm.
Okay, so you need quite a bit of information from our end, especially from the lawyers, before you can.
A lot of information, but not necessarily precise.
Okay.
Not right down to the pennies yet, right? I want to put a deal in place, or start to make the makings of a deal and put it in place, so we can see what it would look like. But as far as everything signed off and everything done, that's ideal. But I think you'd agree that not everything is done within the first couple of weeks. It takes a little while. But Daniel, in this case, probably wants to know what he can afford when he's leaving and where he can be. I can provide that.
Okay, so even before we have the separation agreement signed, we can reach out to you, give you rough estimates of the numbers we're working with, what he thinks he can afford based off of his income, and then you can let us know what he'd qualify for.
Yeah, whether we're, and we've seen that numerous times with the clients we've worked with. I've met them in April of 2024, and they just close in April of 2025. Sometimes it's a year before they find that right house or to where they're comfortable to take on another mortgage, right? We don't want to rush it, but the faster we can get the information, we can give them some parameters to what to look for.
Okay. So I want to ask you some practical questions here.
Sure.
Okay. So say Daniel and Miranda, they have this house together, they use their first-time home buyers to buy that house. Now they're separating, and she's going to buy him out of the house. Can he put a 5% down?
Yep, so that's a bit of a misnomer.
Okay.
Anybody can put 5% down, or the minimum down payment guidelines,
Alright.
as long as they're going to be living in the house and it is their primary residence.
Gotcha.
What does get reset now with the material breakdown of a marriage is they can access their RSPs or their first time home buyer. So that gets reset for them. But that is a bit of a misnomer in the industry. People think if they're buying another house that they need to put 20% down or 35% down. That would just be a debt servicing issue. But if you're gonna be living in the house, the minimum, it can be what we call an insured mortgage, and the minimum down payments can be applicable to you.
Okay, good. So that'll help him a lot, especially, without a job right now.
Yeah, exactly. And then he gets to keep some money out, maybe from the refinance or whatever, so he can save up a couple of mortgage payments while he's in that transitional space.
Okay, hypothetically,
Okay.
Miranda and Daniel just signed a new mortgage, let's say 6 months before they separate. There's going to be a big penalty.
Mm-hmm.
What can we do about that? What do you...
So we would look to do a refinance at the current lender to avoid the penalty, whether that's Scotia or BC or whatever. We look to do the refinance there to keep that initial mortgage in place,
Okay.
so there's no major penalties. We always want to do an evaluation independently, because maybe the rates are higher and rates are lower, and it just does make sense to switch the whole mortgage or break the mortgage term. We can do those numbers really quickly. But in the event that there is a refinance where we're keeping the mortgage in place, we would just do what we call like a port or a refinance without breaking the term. Because some of those penalties,
Hefty.
yeah, I've had to break the news to a couple of people, and it's usually when I'm shaking as I'm dialing it in. It's like they're not gonna like this.
What's the
info.
highest penalty you've seen?
It was in my big blue days, let's call it, and it was $77,000.
No.
Yeah, it was a big mortgage.
Oh my
It was a big mortgage, but it was right when the pandemic hit and interest rates were going down. So when interest rates go down, penalties go up.
So
It's a
penalties
little
would be higher now as interest rates are going down.
Correct, yeah. Not as drastic, because in the pandemic we were basically at 1.5% interest rates that were out there. I don't think we'll ever see those again. But yeah, that's when the penalties were at their most drastic.
So you mentioned these banks that we're all used to, but there are other options,
Correct.
right? Like there's private lending, and people don't need to just look at those banks that you just mentioned.
Yeah, and I'm actually seeing, I would say that the B lending, so where it's just sort of like A- lending, let's call it, from the banks, is probably the biggest portion of growth that we have right now. Because with house prices going up like this, Canadians' income really not tiering with it, not staying with it, more and more people are going to needing B lenders. And the rates aren't drastically different than what you would receive in a bank. There's just fees on top of the mortgage. So you're typically paying about a 1% fee of the mortgage balance to acquire that, but the rates are typically that much worse.
Is it 1% spread over every month you pay those?
Nope, just once and done. So if you're getting a $500,000 mortgage, you're gonna pay $5,000 to acquire that mortgage off the hop, and then you're done. Private lenders, it's all over the place. They price their mortgage based on risk.
Okay.
So it's a little bit harder to predict where they're gonna come in at, but yeah,
So in
lots of
this,
different options.
yeah, in this situation, Daniel might be looking kind of towards a B lender based off of his, I guess, income situation, or a little bit on.
I would hazard to say in this fictitious situation that Daniel's probably gonna be looking at a private lender
Okay.
because he just lost his job too,
Okay.
right? So he's in a tricky situation yet, for sure.
All right. Okay. Well, he's got options. You'll help him out.
Yeah, I can help. Well, yeah, he's found a lot of different ways to.
He gets
He's
a
got
job
a lot
at
of
the
different
end.
talents. He does get a job at the end. Yeah.
He remember Mrs. Doubtfire turned the whole TV show.
Yeah,
And
true.
he's probably very famous.
Yeah.
And he's making good money.
I think so.
Yeah.
Yeah. So maybe it's just a private lender to help Danny for a little while until he can find that next
Well,
job.
tell me
again.
about that. Like, do they have to sign a full 5-year?
No.
Maybe shorter?
No, the vast majority of private lending has open mortgages on the other end. So meaning that you can pay it out whenever. So that's usually the option that we go to get you through a transitional period, to get you in a house, to get you in your house. But the goal here is, once we're working Once the situation changes, let's change your situation for the better one.
Get a different mortgage with lower interest rate with maybe a bank if he qualifies.
Exactly.
Okay, and then that transition period, is there a length on it that you would?
I would say typically it's 6 months at minimum.
Okay.
6 months to a year at minimum, and then of course that just depends on how good Daniel's job is and how everything else shakes out.
I guess technically he was getting paid as a nanny when he was in Doubtfire.
That's true. Yeah,
So
I think I'd have a hard time selling that one to the bank because there was a lot of changes with Daniel there that we'd have to address.
Yeah, that's funny.
Yeah.
Okay, so what else can you tell clients who are going through a separation from your end? What other information do they need to know? Okay, so Daniel, he's walking through my door, right? I understand now that there's a family home, him and Miranda own the home, they're both on title. When is the best time for me to bring you on board and get you involved with Daniel?
Today. So, not that we need to have all the numbers and everything written out and everything strategized. What we want to have is put together a plan for Daniel. And I can review it and I can report back to you as your team, as his counsel, with some options and how I think it's going to go forward. So that way we have a game plan today and we can execute it on 5-6 months, however long that takes. And we can certainly evolve it as it goes along, but we want to have that game plan as soon as possible.
Because maybe we find out that Miranda's going to buy him out, or he's going to buy Miranda out, or the house is actually going to be sold. So our game plan might evolve, and that's okay.
Of course. But at least we have those parameters in place so we can set some expectations for the client.
And it also gets everybody to do their homework, right? We can say to the client, we need this and this and this from you, right? For Zach to run his numbers and figure out the plan, and then we can all move forward.
Exactly, and unfortunately, nobody ever sends me too many documents. There is a lot, right? Doing mortgages right now, there is a lot of documents to go through. So the faster we can start that and start accumulating what we need to put an application in place, the better.
Okay, great. I'll keep that in mind.
Thank you. I just try to be as compassionate as I can. Luckily, I've never been through a separation, but I can imagine it's not the greatest couple of months. It's just about trying to get you that information. I try to just treat it as much as compassion as possible, and it's a crappy couple of months, 6 months to a year typically, till we get our feet back underneath us, and then I'm there as a broker to help them out on the other end too. So let's just try to make it as short a time as possible until we get our feet back underneath us.
Can you tell me a little bit of like the difference between reaching out to a bank directly or reaching out to a broker? What benefits are there?
Well, one, I have a fiduciary responsibility to do the best for the client. So my loyalty goes to the client. In the event that interest rates fall or anything like that, unfortunately, your bank is never going to reach out to you to save you money. A financial incentive, just to be completely honest, to do that for you guys. If I can redo your mortgage and save you money, and I can make a couple bucks along the way, absolutely.
Yeah. That's awesome.
Yeah.
Okay, well, I guess those are my questions.
Yeah?
Yeah.
That's it? That was pretty smooth.
I think so. If anybody has any comments, please put them in the comment boxes, and Zach can answer them. Reach out to Zach. We'll put his website down there
Awesome.
as well.
Thank you, guys.
Thanks so much for coming in.
Yeah, beautiful.
Okay, so if you could give our clients one piece of information, right, or even Daniel and Miranda, what would you say?
I would say 15 minutes can save you a lot of time and give you a lot of peace of mind. So let's have a quick conversation. We might not have all the details on what the separation is going to look like, but at least we can have some parameters for you so we can set your expectations and give you an idea of how it's going to go forward.
So from my perspective, would it be helpful if we brought you in, right at the start of a file, once we know that there's a family home that needs to be sold, or even if we don't know who's buying the other one out yet?
Precisely.
Okay.
Because then at least we know, we can at least have an idea of how the situation is going to flow from a banking perspective, right? How the banks are going to look at it. We can give a little bit of details to our clients so they can make a better decision.
And then we can come up with a game plan. Once things develop more and we know who can afford what and buying each other out or selling maybe.
That we can totally shift off of,
Yeah.
but at least we have a starting point.
Okay, I like that. Well, I'll keep that in mind.
Office once again, in the most respectful way. I hope none of you guys have to use her services, but if you do, this is an awesome place to be. Awesome.
Anyway. All right.
Thank you.
Bye, guys.